so when you look at this portfolio, this is my largest passive income portfolio. Now, I started this account with M1 Finance on October 21st, 2019. And here you can see how much I gain already. I have gained 1%, and the market gains are 64, and I earned $7 in dividends. So that's the great thing about this is that I didn't have to work for that $7. I could have just put this money in your savings bank account, and whichever you have. It can be Chase, Bank of America, just any bank, and you would have gotten around 0.01% interest, which is nothing. So instead of doing that, here this portfolio yields I think about 3.8%, and it's made up of about 60 holdings. Here you can see in which sector I have the most. I have the most. So you can see my target allocation here. You can see 10% in healthcare, 20% in bonds, 10% in finance, 20% in real estate, so on. You have the consumer, tech, and energy. So whenever I see that there's whenever I see this a sector dipping, I switch the target allocation. I buy more of whatever dips. So right now, real estate is one of the sectors what is dipping the most. I'm sure that it has to do with a lot of this market rally, which to be quite frank, I mean this market rally makes no sense. We're just rallying away on news that just trade optimism. That's what it is. That's news that you shouldn't be trading with. You shouldn't be using that to trade. But the recent rally definitely has given me a lot to think. I mean, so the Dow is up, hitting new record highs. I mean, it's just 400 points short of hitting 2,800 points. Same with S&P, looking like is close to touching what 3,100. Nasdaq in the 8,400s. I mean this market rally just makes no sense. It's just the stock traders are just being very optimistic. Now when it comes to this, I like to turn to my favorite investor of all time, and that is Warren Buffett. Now Warren Buffett, I don't think he needs much explanation. I mean, but if he does, if you don't know him, Warren Buffett is the best investor of all time. He's been investing since before I was born. Let's just put it that way. And he's just what you would call the dividend king. And here's my favorite. Here's the quote that I like to turn to: "We simply attempt to be fearful when others are greedy, and to be greedy when others are fearful." So what that's basically saying is that when the market has run too high and investors are being greedy, you do the opposite. You be fearful. So right now, if you would have owned any stocks that trade on trade optimism, and I mean this is all just one tweet away or one comment away from just from both sides, and easily that's the Dow dropping right there, 300 points. I mean maybe 200. It could be even more. You're just one tweet away from just a quick correction. Let's call it that. So, and when he says to be to be to be fearful when others are greedy, that I mean he means just to sell when others are buying. So when market goes up high, you just do the opposite. You do the opposite of what the herd is doing. All right. and and that I mean Warren Buffett is one of those guys that he's the best investor of all time. I mean he doesn't need much explanation. So this is my Robinhood portfolio I think it's a dividend slash value and a little bit of growth. So here are all my stocks. You can see things like Abby, AT&T, and here I'm showing you the my total return on them, on all of them. So right now I have, and here I have two high growth stock. I have a Smile Direct Club. I mean, that's only 42 shares, and I have Uber, which is only 9 shares, which I actually have to trim my position on that one. So I'm a little glad I did that due to the recent dip. So when you come over here, this is Propeller. It's a beta website that dividend.com has created, and here it calculates your next 12-month income, and it tells you what dividend when you're going to be paying your dividends. So I'm going to go to income here, and here you can see how many dividends I'm going to be paid through the next 12 months. And here, November, February, May, and August are my two biggest months. And down here you can see what companies are paying me. Again, for this, you don't for this $200 that are going to come in the next 12 months, I don't have to do anything. And that is the point of this, to get this to a bit to increase that income, and I don't have to work for it. That is the great thing about passive income. So I have two different portfolios because one day I like to see growth stocks. Growth stocks are a great opportunity, and I don't like to miss out on them. And then I also like I like to keep dividends coming in at all times. I like to gain money. I like to be rewarded as a shareholder, just like I'm being rewarded here. And this has only been in the past 4 weeks. I received $7 on dividends. I didn't have to do anything for that. So I mean, I want to create. You want to create a passive income. You want to live your best life. I mean, dividend income is definitely a thing for you. So I created this second portfolio because I don't like to miss out on growth. I like taking riskier shots. I mean, since I'm younger, I'm under the 25 and age. I like to take risks. I mean, when you're older, you definitely want to start laying off the riskier stocks. I mean, unless that's you. I mean, that- if you choose not to, but typically you want to keep your money in safer investments like bonds and 35. It'll be like 70% bonds, 35% stocks, and you want to keep your money safe. So I mean, here I do have bonds too to keep things a little balanced, and but I do it due to the fact that whenever I see any development in the stock market, I adjust accordingly. So whenever people are buying too much, I do the opposite. When people are being fearful, I buy more. To be honest, it's kind of like a buy every dip scenario if the dip doesn't make any sense, because sometimes a company could dip and because of something dramatically changed, and you could be buying without not even analyzing what that change is going to do to the company or to that stock price. Just like McDonald's CEO recently, which had to leave on having relations with an employee, which caused the stock to go down around, I think, 2%. But but the reason I'm focused on making a passive income portfolio is because I wanna earn money. I want money to work hard for me, because you have a job, but that's not passive income. You have to show up there and trade your time for money. And that's the thing. Although even if it's a high paying job, I mean, I work at a law firm. I work at the second largest law firm in Florida. And here's the thing: I show up. You can show up there, and you could either be an attorney, an assistant, or or the receptionist, whichever one it is, you're showing up there and trading your time for money. You because you work for somebody else, unless you're the business owner, which that is a whole different thing. You're still that's another form of passive income. You are running a business. You show up there and you're still trading time for money. And the thing is, time is too valuable to spend it doing something that you don't want to do. And you can't. And I mean, I'm not saying go out there, go and quit your job and go try to follow your dream. No, I'm saying maybe you can use the stock market to grow your wealth. Maybe, and you could do it to a certain extent which you don't have to work anymore. You can spend your time freely. Because the thing is, if you keep spending time, if you keep trading your time for money, um, you traded your time for money. I mean, there's no simpler word to explain it. You wasted you went to a place that you didn't want to be. You traded your time for money, and then at the end of it, whenever you retire, which most people want to retire around 64, 62, now you have around 15 years left because the age expectancy in the United States is around 78 for males and I think 82 for females. So now after working all that time, working all through your youth, at the end you get 18 years of freedom. Unfortunately, you're already old. Maybe you have a few developing conditions. But I mean, I guess worth it, right? You No, it's not worth it. So I mean, the stock market is definitely one of the greatest wealth building engines that there is, such as real estate, owning a business. Those are the things that you want to do. The things like that are called passive income. Then you have active income, which is when you actively go to your job and you trade time for money. So the goal with the M1 finance portfolio is to not have to trade time for money. I mean, over the next 10 years, I want this portfolio to grow to at least, let's say, 100 or 200,000. I invest about $1,000 in the stock market every month. I do that consistently every month, and I hope to keep doing that until I have enough and steady income to finally live off my investments. The Robinhood portfolio is the same exact reason, except with a few factors that are different to it. Just a few growth stocks that I analyze and I believe in, and that I don't want to miss. Since I'm younger, I don't want to miss those opportunities to grow, because that is the thing when it comes to investing. It depends on your age and also your risk tolerance, and I mean, and your emotion level too. You definitely want to cut out all emotion when you come into this. So, I mean, that's basically it, guys. That's all I wanted to discuss today. So, if you guys liked the video, do me a favor, like it. If you really liked it, share with your friend. Share with whoever you want to. So, thank you guys for watching. I'll see you guys again in the next video.